All right, this video is a review of the auction process and the TPO profile. And this is the start of a market profile series. And so what I'm trying to really do is understand the auction process that happens in the market. And at the same time, I'm going to use this TPO profile here to illustrate it. So I got requests for videos, and I think it's a good idea just to show exactly what it is I'm working on right now and what I'm studying. But to be clear, the TPO profile is not something that you're going to use to necessarily make your trades. It's not like a real-time indicator to take a trade or anything like that. Rather, it's going to be how to read market structure and how to read the auction. And I think that that's essential in learning how to trade. If you get these visuals from me or from someone else, it's really difficult to look for those points of resistance and support and when you're doing your preparation for trading, because if you don't understand this, it's just a foreign object on a page. And so I am going to cover both of those things in a single explanation, and I'm hoping it won't be too much, but I would suggest going through this and pausing as you need to continue. So the information that I'm using is all from the Chicago Board of Trade's seminar. And so this is how they teach their traders to trade. And this is, what you can consider a professional trading bit of analysis. I can't say whether or not they use these exact charts or how they do that, but this is in fact from their trading manual. So that's why I continue to go over this slowly, is just because it has a building effect. And I think layering on more information each day is the best way to get there. So with that said, I do want to say that the value proposition of using this is that you can see the distribution of trading, and you know what traders consider to be fair, unfair, and balanced pricing. And again, using this TPO profile graph, you can visualize it a little better. I do think in time you can probably get used to reading this without one, but for me it's simple right now, and I'm definitely a visual learner, so I'm going to stick with it. So I'm using a graph here from July 10th for no good reason except that I thought it was a good example to start with and a little more clearly visible. So first, I'm going to explain the auction process, and I'm going to keep this simple. I made brief reference to this the other day when I was talking about the Beanie Baby auction, but I'll keep it more normal this time. This is the marketplace here for the micro E-mini S&P futures. That's what I'm going to be using. You would use the same analysis for ES or other futures, but I just choose to do the MES for now, because if and when I do take trades, I'm not trying to put too much leverage out there, I don't want to put too much leverage out there yet. So again, just a quick review, marketplace facilitates trade. So what that means is when price is rising, the marketplace is trying to fill buyers' orders. When a price is trending upwards, that means buyers are coming in. So the marketplace is bringing those, filling those orders by matching up buyers and sellers. Similarly, if they're going down, they're still bringing in sellers. And so the marketplace is just helping to facilitate that trade. Eventually, when a price is trending upwards, you'll run out of buyers, and the marketplace will run out of buyers. And so that means they filled buyers' orders and the sellers are coming in. That would cause a stop in the uptrend, and it would cause a price reversal usually. And so that's just how to think of an auction. The beginning and end of one uptrend is just the start of another downtrend. And so those are, that's really how you're supposed to be thinking about this in terms of the auction. If the price is going up, one thing that the market will also do is advertise for an opposite response. And so what that means is they're giving an opportunity for sellers to come in and buy this too. And when the market's doing that, it's facilitating that uptrend, but it's also advertising for sellers. And so price just bounces around based on where those buyers and sellers are. And that's just something else to keep in mind, and something that's going to come up when I'm talking about this. If price is moving up though, and it's advertising that price to sellers, and sellers don't come in, the price is going to continue upwards. So really, when you're thinking about an auction, you're just looking for that continuation or change in direction at different prices. So I want to come back over to this now. This is a visual that I put up on my Twitter a lot. This is also something I've seen across a lot of different people on Twitter who use this for their analysis. So again, just to lend some credence to the type of analysis that I'm talking about, wanted to mention that. The TPO profile, so that's what this is. It is a time price opportunity, and I'm going to type in a couple notes here, but the TPO profile is time price opportunity. And the most important thing here is that all it's doing is showing how much time is spent at different price levels. So time spent at price levels. All right, so let's keep that there. The next thing is that each letter is assigned to a 30-minute period. And the way it's split up on mine, so this is just an example, and it starts from midnight. It starts at midnight and runs till noon, and then it runs from noon until midnight again. So it's a 24-hour period. The letters begin with capitals. So over here on mine, it starts with capital A. And all of these A's here represent the first 30 minutes of trading. What it does is it prints a letter for where price has been during that first 30 minutes. And so I'm going to type some notes over here again, but we have from midnight. So let's say A. So we started A. It moves alphabetically. So from midnight, we have A through X print. That's 24 letters. And each letter represents 30-minute period of time. Let's just call it 30-minute period. So what that means then is A will be the first 30 minutes of past midnight, and then B will start printing the next 30 minutes, and then C will start printing. So we'll go over reading that in a second, but I just want to put these up first. And I'm going to put a note below this that the capital letters represent midnight to noon. Then what happens is the market profile gets to X and time gets to noon. What happens is this will turn to lowercase letters, also A through X. So I want to keep my notes consistent. So I say 24 letters. Each letter represents a 30-minute period. And this occurs from noon to midnight. So that's how you read it. So that's actually the concept of it. Now I'm going to get into how you read it. So I'm going to post these notes here and need to move these. All right, there we go. All right, so now how are we going to read this market profile? I'm going to keep this really simple because I think the name of the game is just trying to understand the visual that we're looking at, but also understand how it presents the auction that's happening. Mine is set up to, let's get rid of that. Mine is set up to here, show the opening price with a yellow A. So during the first 30 minutes, A occupies this entire initial balance range, and that's also marked by this gray line right here. You can see we opened here, market tests below and above at some point, but trades in this range. On B, so the first 30 minutes are over, it was midnight, so now it's 12:30 a.m. B rotates down further. So it marks a single print during the second 30 minutes of the market being open. I'm going to get rid of that. All right, so it marks this second 30 minutes. Price marks down here. We know it's a single print, but not going to get really too far deep into what single prints mean right now. But that's what a single print is down there. It doesn't trade this low again during the session. I know because the session's over and there's nothing below it. So that price right there represents an unfair price. Basically, the market presented an opportunity, and really buyers and sellers weren't very strong. Sellers didn't take it further down, and buyers took it within this A range. So nothing much happened there. So now we're an hour past midnight. So now let's look at C. So we had our session low down here. C starts to come in, and the bottom C that we see printed is above the bottom B. You see that? So after trading low, we start to see some buyers come in. We had our lows down here. A's low was here. we start to have some buyers in, and you can see that the buyers are able to take this above the high A, so above the high in the first 30 minutes, or for the first hour for that matter. And it marks a new high with this C right here. So this is called a rotation upward. Not the word rotation, really brings to mind like something circular in motion, but it's not that. It's just called a rotation. Don't get too caught up. Again, don't overcomplicate it. And then looking at, so I'm going to move up a little bit. So then we have C trades up to here. What happens next is that you want to look for that next letter to see what it did. So the lowest D is here, but the highest D is here. So from that move up during C and D, and now into E, you're going to see that the market is auctioning up higher. So while C was stuck here, D and E were continuation of the uptrend of C. And so what that means, of course, is the market's rotating up. The market is auctioning up. It's finding more buyers here. But we're not done there, of course. The next thing you want to do is see what happens with F. So E marks a new high right here. F's high looks to be right there. And you can see that F trades down into there. And it actually creeps into some of that initial balance range. The initial balance range is sometimes seen as an area of support. So you can see that it did test it again and reject. So buyers stayed in control. But essentially what happens through F and all the way to, in Q even, that the market starts to do a lot of this. It starts to find an area where it's advertising for opposite response, but it's not getting strong enough to take it, down or up. And instead we're seeing kind of an up and down. What this means here is that the market has finally found a place or a price range where two-sided auctioning is going to happen. And that's what this blue is on my chart. So white is not the value area. Blue is the value area. And what that shows you then is that as this protrusion right here shows, the market spent the most time, about 70% of time, in the value area. And the center of that value area is this pink line right here. So that's called the point of control. So what that's showing you is that the market finally found a place where buyers and sellers are in agreement. They trade back and forth for a little while. And this is a place where the two-sided auction's happening. There's really not a lot more to share at this point. I really wanted to go over just how to read it, what these letters mean, and kind of show you what it means when this trades, how this initial balance range acts, a little bit of support here, and then using the rotation terminology to describe what happened here. Just a quick note, this is an interesting session because it went all the way up here. The big X's went through here, but because I changed some time configurations on mine didn't print some of the small X's, but it doesn't matter because we're looking at the same piece of analysis on this particular time frame. So we can use it to analyze this time frame. Again, small f at some point went all the way up here, left some single prints, but nothing major up there. But there are ways to look at some of this structure and call it weak just because you're seeing some of these two-letter prints and it looks like there was no real agreement there. So it had a spike and that was that. Finally, just to note how to use this in the future, a lot of what the TPO profile is going to show you in discovering this value zone is just knowing where some of these buyers and sellers are, but more importantly, knowing where they're not. So if on this day we called it an unfair price up here at F, part of what you would think is that the following day, this is going to be a point of resistance just because, buyers weren't able to take it higher. So that's one of the things you can look at. There's several, there's a lot more strategy that goes into reading this, but at this point, I think that that's a good place to stop.